YouTube, what's happening? Chris here. I want to bring you all a little update today on Digibyte. Right now we're down 6.86%. We're at 0.0126. Guys, this was the pullback that we were looking for, the throwback that we've been looking for. What happened was we saw that rejection off of this 200-day moving average, and what needs to happen is for us to attempt this again, there's going to have to be that cooling off process, which you're seeing right now, before we can have another leg up to try to get up over this 200-day moving average and close above it. It's a very powerful long-term moving average, and it's something that you want to pay attention to. You even see these wicks, how we wicked up into it. So that's something that we're really going to keep a close eye on. And guys, also if you could like, subscribe, hit that notification bell if you do enjoy these Digibyte videos. If you want me to keep doing them, once or twice a week, I'll do that. And also put down low. I don't know if you guys are March Madness people, but I played high school basketball and played it all my life. Love basketball, sport I love, and I'll be watching the NCAA tournament here, and I just want you guys to put down low who you picked to win the overall tournament if you got into that. So would love to hear your guys' opinion on that. But we're going to jump in here. So on Digibyte, guys, we're down almost 7% here, so this is cool off we needed. And another thing that's happening, we lost this 0.382 so far today on this Fibonacci. We're down below it. We haven't closed for the day yet, so it could come back up above that. Keep your eye out for that, but we're going to have to just go with what we have right now, and right now we are below it. Another thing is we're down below this 20-day EMA, which we've been respecting this whole uptrend. So if we were to close below that, guys, I would not be shocked to drop down to this 0.618, around that 0.0111 area. And that would also coincide with the 50 moving average right there. That would act as support, hopefully. And we're also getting a golden cross of that 50 moving average over top of the 100-day moving average. So a healthy pullback or correction down into here would be no problem at all. We would just want to see good volume and for this 618 to hold and then start moving up farther. Get setting that next higher high, because what we've been having is there's your higher high, higher low, higher high, higher low, higher highs, higher low is what we're trying to form here. So that's what we're going to have to keep our eye on. Now if we drop below that 0.618, we're going to want to look for support at that 100-day moving average. Remember, with moving averages, a lot of the times they're going to act as support or resistance. In an uptrend, they're going to act as support, and in a downtrend, they're going to act as overhead resistance, just like this 200-day moving average. You see how that's acting as overhead resistance right now? And then these are acting as support, our 50 and our 100-day moving average. So do a little bit of reading into moving averages. They can be very helpful, especially in trending markets. All right, so if the market's going up aggressively or down aggressively, that's when moving averages are going to be the best. When you're in a sideways market moving sideways, the more reading I've done about them, you kind of just want to stay away from them. They can kind of chew you up in a way, so you always want them in a direction. You see here, guys, this 20 EMA was just pressing us down there until we finally got up above that, but that was all that overhead resistance was that 20 EMA, and now we're treating it as support because we're in that short to intermediate term uptrend. So keep that in mind. Another thing I'm looking at here is the stochastic. Our side, we're at 5 and 21, so we're getting towards that bottom here. And what we could potentially have is that little bit more of a sell-off down in this area, guys, and that would match up with the stochastic getting in that oversold category to where buyers would be stepping in, and that would be a nice spot for a bounce. So that's another reason why I'm looking for that, because we've had this downturn. You can see it in that stock, and now we're starting to get a little bit of a turn sideways there, and there's not a ton more room to go down. And what I like to do is look at this as support. Do you see this, guys? Right here, rough estimate there, and we're right at that area, and you see we found support all the other times off that. So that's something you want to look back for and always check that history. But the stock's another reason why most likely we could get a bounce in this area. Since we have had this cooling off period, we're going to have to challenge that 200-day moving average again. Okay, volume is still kind of just going down here. You can see the moving average starting to point down. So that is a good, decent amount of volume here that we have had to the downside. So it's good, though. That's what we need, guys. It's healthy to have these throwbacks and these corrections. You always want that. It's just like a human being breathing is something you'll read in a lot of these books, is that the market has to do that as well. It can shoot up real hard, but then it has to catch its breath and have that throwback before it can move further. So these are very healthy, and it's good that we're still in that short to intermediate term uptrend. You really want to keep that in mind. All right, so next thing I'm going to do, I'm going to clear off the fib for us, and we're going to go to the RSI and see how that's looking. And guys, also what I like to do when I'm by myself I really like to just look at the candles and step back. Once you start studying about Japanese candlestick charting and all that, you know, it starts to be like reading music, and you can start seeing these different candlestick formations and how the candlesticks are forming. You can form clues into which direction the market may be going. So it's something that's always cool just to really step back and look at how these candle formations are taking place and what candlesticks are significant. You know, when you see long wicks that you're going to have that sell off, or look for those bullish engulfing candles, the doji like you have here with good follow through. Those are the type of things that you want to look for. All the wicks up here, like we were talking about in that video a week or so ago, once you started really seeing those, there's a lot of profit taking happening, especially by that 200-day moving average, which is a big deal as well. So next thing we're going to look for is this RSI, see where we're at. And I love working with the RSI. It's a very powerful indicator, guys. So see, our price was rising, and then look what was happening with our RSI. We kind of triple topped there around that 76, and now we're heading down, and we actually broke through what we would want to be support around that 55 area. So we're going to see if it turns around at all today. The next area after that would be around 43 on the RSI. We'd look for that bounce. And I'm big on the RSI. I play it like a line graph. I'll draw support, resistance, trend lines, all different types of things with it. You know, trend line breaks off it, and a lot of the times it's very accurate. So you really want to pay attention to price movements as well as what's happening with the RSI. If price is moving up and the RSI is going down, most likely you're going to have that sell-off. Sometimes it'll take a couple days, sometimes it'll take a week, but eventually it'll happen, and that's what we've been talking about, how we need that cooling off period so that we can get over that 200-day moving average. Guys, I can't tell you how important the 200-day moving average is. Some people want to make jokes and stuff about moving averages, but they're very powerful. And if you go back and you look at the history of Digibyte or Bitcoin, you know, there's a lot to these moving averages, and especially when you lose them, when you start having those death crosses, or you start having candle closes like we did below that 200-day moving average, that's a huge sign. And go back and look at all that, and you can see it's just institutional investors, they're out. And then they'll leave you bag holding is essentially what happens. So, you know, this is Digibyte right now. Guys, we're down 7%, pretty close to 7%. We're just going to have to see if we get that bounce off that 0.618. And I have another pattern that I've been looking for in Digibyte, and it's kind of coming to play, and I may share it with a few of you guys in a video, maybe tomorrow or the next day. People really appreciate Digibyte and looking for different, you know, chart patterns and things, but there may be some good news for Digibyte, and we're just going to have to see if it plays out. But look for that video, guys. If you enjoy what we do here, like, subscribe, and we'll keep them coming. God bless you all.